tensions are flaring up again after China imposed even tighter export controls on rare earth minerals. The Trump administration saying it will set price floors across a range of industries to combat market manipulation.
China a warning it is not afraid of a trade war with the U.S. after President Trump announced plans to impose 100% tariffs on Chinese imports and new export controls on critical software. However, the president also then softened his tone over the weekend, saying everything with China will be fine.
Global markets are quaking as tensions between Washington and Beijing flare in ways unseen for years. The U.S. has slapped a sweeping 100% tariff on Chinese imports, targeting electronics, solar panels, electric vehicles, and medical devices. Framed as retaliation for China's rare earth export restrictions, this move signals a deeper shift toward open economic confrontation. With supply chains strained and nations forced to pick sides, the question is whether this sparks a new era of economic warfare. How far could this escalate, and who will bear the cost when the world's two largest economies collide? Markets reeled after Donald Trump declared that if China wants a fight, America is ready. His words sent Asian stock exchanges tumbling and traders scrambling for stability. By morning, Beijing hit back, with China's Ministry of Commerce vowing countermeasures to protect national interests and global supply chains. The South China Morning Post reported that Chinese officials are preparing a bold retaliation, tightening exports of critical resources like lithium, neodymium, and praseodymium, key to semiconductors, EV batteries, and advanced electronics. China controls nearly 90% of their global processing, and the Financial Times noted Beijing's readiness to wield this dominance as a geopolitical weapon. Without Chinese minerals, production for brands like Tesla, Apple, Intel, and Samsung could halt. Washington sees the risk. A supply cutoff could cripple America's tech ecosystem. Yet Trump's team, viewing this as a chance to reclaim technological leadership, refuses to back down. Bloomberg Economics reported that the U.S. is crafting financial incentives to shift manufacturing to India, Vietnam, and Mexico, aiming to redraw global production. Lawmakers call it economic encirclement, a bid to weaken Beijing's industrial reach and restore U.S. dominance. China, however, sees this as economic aggression, an attempt to destabilize its economy's foundation. Nikkei Asia reported that Chinese think tanks presented Xi Jinping with three strategies: selling off China's $770 billion in U.S. Treasury bonds, restricting high-tech component exports for U.S. defense and space sectors, and boosting military activity in the South China Sea near Taiwan and Guam. A Rand Corporation study warned that China is poised to combine economic, military, and diplomatic pressure to shift global power dynamics. The Pentagon responded, ramping up surveillance and deploying naval vessels to the Sea of Japan, signaling a dangerous new phase. The Wall Street Journal revealed U.S. anxiety, with a leaked Department of Energy report admitting America's rare earth reserves could sustain its semiconductor industry for just 7 months without Chinese supplies. A prolonged cutoff would stall U.S. tech production. Beijing, cautious to avoid global panic, knows its export-driven economy risks backfiring in an uncontrolled escalation. Yet Reuters reported Xi Jinping, in a closed-door meeting, vowed that if others choke China's economy, China would choke them with technology, a stance backed by senior officials. Washington countered with a $400 billion program for technological independence, including new semiconductor plants in Arizona and Ohio, expanded mining in Nevada, and a national lithium reserve. CNBC analysts noted these projects will take years, while the confrontation unfolds now. In Europe, panic spreads. Der Spiegel reported German leaders holding emergency talks as their auto industry, reliant on Chinese lithium and magnesium, faces collapse. Without these materials, Europe's industrial engine could stall by spring, risking recession. China is restructuring its economy, with state media pushing "Made in China" for China to emphasize self-reliance. China Daily reported a 1 trillion yuan investment to boost microelectronics and rare metal refining, preparing for a world without Western cooperation. The U.S. is considering a ban on dual-use tech exports like AI and quantum processors, with a White House task force studying a full technological embargo, akin to the 1970s oil crisis. Economic experts warn of a dual-world economy, with Washington and Beijing leading rival blocs. The Economist cautioned that a year-long trade war could collapse globalization. As multinationals build separate supply chains, slashing efficiency. The question is endurance. Who can withstand the strain longer? China's growth falters amid shrinking exports, but Beijing is forging alliances with Russia, Saudi Arabia, and BRICS nations. RT's Global Monitor noted 30-plus countries preparing to use the yuan and ruble for oil trades, bypassing the dollar. A major challenge to U.S. supremacy. Yet, trade persists, with ships crossing the Pacific and contracts signed, masking deep mistrust. Each tariff and export control widens the divide, echoing Cold War tensions. Geopolitics, technology, and resources now fuel a struggle for dominance, with neither side yielding. Canada also faces U.S. trade friction. High-level talks in Washington, involving Trade Minister Dominic LeBlanc and senior negotiators, aimed to stabilize steel, aluminum, and energy sectors. LeBlanc called the talks productive, but provincial leaders demanded Ottawa push back against Trump's policies. Trump urged quick deals to ease economic strain. His 25% tariff on non-U.S. built cars hit Canada hard, with Stellantis shifting Jeep Compass production from Ontario to Illinois, despite Canada's $15 billion in subsidies. Industry Minister Melanie Joly called it unacceptable, vowing to hold Stellantis accountable. Carney pledged support for affected workers. That's the story. What's your take on these trade tensions and Canada's future? Share below, subscribe, and stay tuned.